Gold prices breaking below 1,600. John, what's the next key support level that gold needs to hold now that we've sort of given up that $1,600 level?
Well, once again, it'll probably be the 1580, 1550, and then back down to the 1520s, which was already tested, in recent sessions. Right now, we're in the middle of this range. I think 1500 is certainly key, but you could have a flat upward correction even as high as about 1700 if Iranian tensions ratchet higher. This is more saber rattling. I'm not all that concerned with it. Gold is stuck in the middle at the moment. I would rather wait for the European bond auctions to come next week, and of course to see what happens, with Iran and the Straits of Hormuz, but most importantly, what funds do when they go into reallocation jamboree starting on January 7th.
Right. Could you argue that the recent run-up of the last couple of days has been some reallocation into gold, or do you think it was just sort of a beginning of the year bounce?
I rather think is the January effect, which was manifest in all markets, certainly on Tuesday. The buy everything syndrome was alive and well. So it's too early to declare that there's a, flocking back into gold right now. I tend to go along with the school of thought that says that a major cycle in the markets has ended roughly the third quarter of last year, and that we're sort of getting away from an era of high gold and silver prices, high bond prices, and very weak dollar, and entering a new era of high volatility, perhaps many gyrations in Europe, but no meltdown, but certainly a stronger dollar by all accounts.
Now, what happens, though, when the spotlight gets shown on the U.S., perhaps, once Europe sort of works its issues out to some extent, and the focus is now on the U.S., and can we actually repay our debts? Then what happens? And arguably, $1,600, $1,500 gold is still high. It's just not record high.
Indeed, and I think when the focus shifts, there'll be various surprises at hand, such as the ones we recently learned about, that in fact the dollar during all of this crisis since '08 has risen some 13% against other currencies, and that it has actually gained percentages in global reserves. There are other metrics that I would really certainly be watching at this point, one of which was this morning's excellent jobs report. So all in all, I think the dollar has enough reason, not only for the lack of alternatives, but from the improving structural conditions in the U.S. to keep shining probably above 80 on the trade-weighted index.
All right, thanks, John. I really appreciate it. So gold really chopping around that $1,600 level.